I've helped negotiate a lot of deals in my career, and I've seen a lot of things over and over again that can help or hurt an investor in the negotiation process. In this video, we're going to go over how the most elite investors in the world negotiate to have a long career of more transactions per year than everyone else. Let's go! The guidance I'm going to give in this video, every single one of them will apply to both the buyer and the seller of a multifamily transaction. What every investor has to remember is that in every transaction, there are a lot of people watching the way you negotiate. It's not just the buyer and the seller, and word spreads on whether you are someone who's easy to negotiate a deal with or not. The multifamily investment world is a very, very small world, and you will likely face a lot of the same players in the next 10 to 40 years of your investment career. How will they remember you? How will they think of you? And how they remember you and how they think of you will sometimes determine whether you even get an invitation to the dance on subsequent deals. The best negotiators in the world that I've watched in this business have developed a sixth sense about how to negotiate a deal that gets what they need on their returns, but leaves all the parties in the transaction yearning to bring them more deals, yearning to do more deals with them. Negotiating advice number one, and this is going to seem cliche, but you have to think win-win. Now, most investors who just heard me say that says to themselves, yeah, that makes sense, think win-win. But what really happens in practice is most investors only think win. They think, I've got to win the negotiation. And once you start thinking about winning like it's a game, then you've already lost. That's when deals start going off because ego comes into play. Money and financial sense goes out the window and it all becomes an ego-driven, I've got to win this negotiation. And when you have two alpha personalities with the need to win, the deal goes south in a hurry. Thinking win-win brings in one little word that is one of the most powerful traits of the most elite investors in the world. Empathy. Empathy doesn't mean being weak. Empathy means understanding the other party's challenges and literally working together to get comfortable with a solution to those challenges. The second tip to negotiating, don't be insulting. I can't tell you how many times I hear or see things in a contract or in a conversation or in a tour and in a negotiation that has insulted the other party. Investors are human beings. We're all emotional creatures with varying levels of ego. The second an investor feels like they've been insulted on the buy side or the sell side, particularly someone who doesn't need to buy and doesn't need to sell, it's easy for them to just walk away. If you even have a suspicion that what you're about to propose could be insulting, I would just think about how to deliver that message in a way in which the other party doesn't feel like you're playing hardball. Number three, be flexible and be reasonable. Elite investors go into transactions with the attitude that they're going to make a deal work, not win a negotiation. Elite investors know that in very tight supply markets like we have in 2021, where there's very, very little supply, very little deals to go after to acquire, that it's too costly to be inflexible or unreasonable because months could go by before you have another shot at an asset that meets your criteria. Number four, always make a counteroffer. So many times I see on the buy side someone making an offer that is too far below the ask price. The seller gets insulted, they just walk away, and to make a statement, they don't even counteroffer. I also see it on the other side where a buyer makes an initial offer, the seller counters the offer but barely moves, and the buyer gets insulted and the buyer walks away without counteroffering. I can't believe that was their price. I'm not even going to respond. It doesn't cost you anything to counter an offer. But if you don't counter, there's a 0% chance of anything happening. Speaking of, don't make a low ball offer. You have to know where the market is, and there's no excuses in today's time with today's technology and so many data points that are available to you on what transactions close at to make an offer that veers in either direction too far away. It doesn't make any sense to expect a certain rate of return or price that is way different than what actually exists in the market. When you make a lowball offer, egos get involved, and the deal is toast. Negotiating tip number 5, elite investors think long term. Elite investors have figured out that each negotiation is not about that one deal. It's about building a reputation each deal they do that increases their deal flow from brokers and others involved over a long period of time. Elite investors have also figured out how each deal that meets their criteria that comes to market, how rare that transaction is, and therefore how important it is to negotiate in a manner in which is respected by all, so their long-term deal flow continues. Let me describe what I mean. I cover 14 counties in the northern half of Florida, which represents nearly half the state. When you look at the trailing 24-month of sales of every transaction over 100 units, and let's say an investor only buys conventional, not student or affordable housing. They buy assets that are built only between 1970 and 2010. Let's say they only buy C+, B-, B, and B+ assets, which represents nearly every asset. The numbers are that there were only 65 closings over that 24-month period. If you divide that by 24 months, that is less than 3 deals per month in the entire northern half of Florida. Now, that doesn't even take into consideration whether any of those 3 are in locations that you would buy, whether those assets were even presented to you in the first place, whether they are of a construction that you would accept, and the list goes on and on. My point is that in a huge geographic area, over a 24-month period, you may only have a shot at 1 or 2 deals per month. And you're competing against thousands and thousands of investors who have millions and millions of dollars of equity and even more money and debt backing them. This is why elite investors think long-term about negotiations. This is why there's a direct correlation between the number of deals you buy and empathy negotiations. Thank you very much for watching again. Please give me a like, comment, and subscribe, and I'll see you on the next one.